If you're new to the Binance Earn menu,
the screen can look a bit confusing.
So different products like Simple Earn, Advanced Earn, and Loans are all in one place.
In this video, I'll explain what each section does,
which product is simpler, and which one is riskier. For those new to Binance, the registration link
and referral code are in the description.
Check it out there. Now let's start with the basics of Binance Earn. First, let's look at the main page.
I clicked Overview, and the Binance Earn main page opened.
This is the main screen of Binance Earn. Here you can see your total balance, yesterday's earnings,
popular products, APR rates, and product durations.
But here's the biggest mistake people make. Just looking at the highest APR and jumping into that product. For example, there is a section here called Estimated APR. By looking here, you to relevant products. Look at the APR and try to enter. Unfortunately, a high APR doesn't mean the product is safer. First, you need to check if the product is flexible, locked, staking, or under Advanced Earn. Now that we've seen the home page, let's answer what Simple Earn is. Once inside Simple Earn, you'll see it's the most trusted platform. Basic and beginner-friendly section of Binance Earn. You'll usually find two main options: flexible and locked. You can see them here. Tapping all durations, flexible or locked. Shows the type under duration. Listed in days. With flexible products, you can use your assets more freely. With locked products, your assets for a set period. You must lock. When I click locked, you can see the locked tokens and the products available for trading. Think of Simple Earn like this. Instead of letting your crypto sit idle and putting it into supported products, you earn rewards. Binance Simple Earn. Flexible and locked terms for over 300 rewards. With flexible or locked terms, supported assets and rates may vary by product and region. Keep that in mind. First, on the Simple Earn page, click the Auto Subscribe button. Hear about the flexible, locked, or soft staking options available in your wallet, or you want to use flexible, locked, or soft staking. I'll explain more about that in a moment. Choose between flexible or locked. You can use auto subscribe settings. For example, locked means locked. If you want to lock your funds for a fixed period, choose locked. Select the locked option, and it will display the available tokens. Say you have some Solana. When you click Solana, in the locked section, you can choose Sol staking. The options show different lock periods. If you lock for 14 days, you get 1.8% APR. Tap APR details to see graphs. For 30 days and 1 year. Automatically. Lock for 30 days, you get this rate. Lock for 60 days. And for 120 days, you get this rate. These are the returns for each lock period. These APR rates can change. They can vary by region or update live. Rather than relying on these values, you should check them yourself and base your decision on that. Click the subscribe button on the right if you have available balance for that product. By locking it for periods like 120 days, 30 days, or 14 days. Finally, based on the APR shown here. And remember, these APRs are annual, not daily. It calculates your return based on that APR and credits it to you. I used Solana as an example here. However, by clicking View More here, you can also see all available tokens. You can also check the APR rates based on your preferences. In the locked section, the flexible section works the same way. For example, let's say you have USDT or BNB. For BNB, the auto-subscribe feature automatically deposits and stakes it. If you want to exceed the available level, click the auto-subscribe button for the minimum amount here. Is 0.003 BNB. Enter the amount. And if you have BNB, you can invest accordingly. I have USDC now. After clicking tap up, I transfer and send it to the desired location. Returning to the example, if I deposit $400, I can see the daily return. Here, you can see that when you are in TR2, the APR decreases for amounts above $200. If I set it to $199, I can also see the estimated earnings increase automatically. You can see this. You can see it increases cumulatively. Normally, if I deposit $400, it would give me, even though it should offer a higher APR. The estimated daily earnings are only 0.05 USDC. Here, you can see that the real-time estimate automatically displays everything, folks. You can view everything from order types to positions. Right here. You have complete control over all of it. Based on your current balance, you can also see your estimated daily earnings. You can run the calculations yourself as well. That's how Simple Earn works. Now that you understand that, let's move on to staking. So, what is staking? When you go to this section, under Simple Earn, Ethereum staking, Solana staking, and soft staking. Staking here is slightly different from normal savings. The concept here is actually about proof of stake, which relates to networks. So, it's about earning network rewards from assets like Ethereum or Solana. Binance simplifies the technical process, simplifying it for you without having to set up a validator or handle technical operations, so you can participate in staking products. With soft staking, some supported assets, while they stay in your spot account, you can even earn staking rewards. But this doesn't apply to every token. When you go to Ethereum staking, you'll see details like the conversion ratio, the total amount of Ethereum staked, and if you hover over the reference APR, it shows how the APR has changed over 15 days, where it started, and what it's been over the last 90 days. So you can review and analyze the trend. When you hit subscribe, you deposit your Ethereum and convert it into VB Ethereum. Here, in the APR reference section, based on a dynamic and regularly changing APR rate, you can see your estimated monthly or daily returns, as well as the annual estimate, right here, and complete your transaction. Here, it shows that 1 Ethereum equals 0.91 VB Ethereum. So, when you swap 1 Ethereum for VB Ethereum, you won't have 1 Ethereum anymore. You'll have 0.91 VB Ethereum. After depositing yours, don't wonder why you didn't get 1 Ethereum back. Make sure you understand this part well. Take the time to read these carefully. Then, go ahead and make your transactions. 1 VB Ethereum exchanges for 1.097 TL. It is equal to Ethereum. So, they are a direct match, based on current rates. That's it for this part. In Simple Earn, the options are Ethereum or Sol staking. So, by entering the Sol staking section, you can access these options. Now, let's talk about Sol staking. As I explained in soft staking, even with supported assets sitting in your spot account, Binance lets you earn staking rewards. On the Binance soft staking page, supported assets held in your spot account earn staking rewards, and only eligible assets qualify. Scrolling down to see these details, you can see eligible tokens, minimum holdings, maximum cap, estimated APR. The cumulative rewards. All on this page. You might have BNB, Solana, or Ethereum. You're not planning to sell this. You're planning to hold it long term. Go to the soft staking section and toggle this switch to activate your earnings. As you can see, a new section appears below. And when your minimum balance exceeds 0.1 Ethereum, the estimated APR here is 0.5, and your cumulative rewards and earnings you can see here. If you don't want to use this, you can simply turn it off and deactivate it. So, we've covered the basics of soft staking. That's my understanding. Now, let's move on to Advanced Earn. When we get to Advanced Earn, beginners should take their time here, friends. Here, you'll find products like Dual Investment, Smart Arbitrage, and on-chain yields. These products may offer higher returns, but they're more complex. In other words, you shouldn't invest based solely on the APR. You should also know this. If you don't understand how a product generates returns, don't invest in it. Now let's talk about dual investment, what it is, and how to use it. Dual investment isn't like traditional staking or simple earn. Instead of just holding a coin for rewards, you pick a specific target price and expiration date. There are two options available. First, you need to choose the token you want to use. Then you choose the payout currency. For example, say you have Bitcoin. The system lets you choose USDS or USDC as the pair. I selected USDS. As I said, there are two options. First is buy low, second is sell high. Buy low means this, and you need to understand it well. It's for those who want to buy coins at a lower price. For example, Bitcoin is at $76,600 right now. And you want to buy at $76,000. You deposit your USDT, set a target price. On the maturity day, if Bitcoin hits that level, the system buys Bitcoin for you. If it doesn't, your USDT is returned and you earn a reward. This is the reward. What it shows here is the APR. For example, I'm currently at the $76,000 segment. Also, note the duration. For instance, this is a Oneidae product. It shows a 134% APR for a Oneidae term. However, when I clicked subscribe, it first asked me a question. After you complete the question, you can pause and review the answers like this. I click done, and it says go to Dual Investment. Congratulations. When I press subscribe, it shows how much USDC I have in my wallet. But I have USDC now, so to show you clearly, I select USDC and then press the subscribe button. So I'm depositing the $200 I have into this. If the price is above $76,000, it shows how much I'll earn. If it drops below $76,000, it shows the amount. It also shows you'll get $200 worth of Bitcoin. So that's how it works. Here's one key thing. Never forget this. Set a target price to buy low, the settlement date and its duration. The APR you'll earn, you can see all this by clicking subscribe and entering your amount. You can see exactly what you'll get, or how much Bitcoin you'll receive. And that's how this section works. So, here's what buy low means. Now, let's go over sell high. Sell high is for those who want to sell their coin at a higher price. For example, say you have Bitcoin and are ready to sell at $77,000. You deposit Bitcoin, set a target price. On the due date, if the price hits that target, your Bitcoin is converted to USDT. If it doesn't, you keep your Bitcoin and earn a reward based on the APR. This is for when you've bought Bitcoin and want to sell it. It works like a limit order. What if Bitcoin doesn't hit that level? Here's an example with $77,000. It displays the 80% APR you entered. Day 1, Day 3, Day 2, pay attention to these days. 6 days, 3 days, 10 days, 7 days, note these durations. For instance, I tried to set a ONADE product at $77,000. Let's say you have 1 Bitcoin. When you input 1 Bitcoin, you set it to sell if the price exceeds $77,000. And here it shows the amount you'll receive. If the price doesn't hit $77,000, you'll get 0.0024 extra Bitcoin. 0.0024 more of a Bitcoin you have will be shown and explained here. Set the condition, and you'll see the calculation here. We've covered this in detail. Here's an important point. Dual investment is not risk-free. Once entered, you cannot change the target price or date. Keep this in mind. Also, a high APR is an annualized rate. Seeing 150% APR for ONADE trade does not mean you'll earn 150% in a single day. As I mentioned earlier, in short, dual investment is for buying or selling at a specific price. But a beginner, just because of a high APR, shouldn't jump into this product, guys. I think you get the picture. Moving on from this as well. Now I'm going back to the menu. Next up, Smart Arbitrage and Advanced Earn. So what exactly is Smart Arbitrage? Smart Arbitrage is one of the advanced products in Binance Earn. Don't think of it as simply as staking or simple earn. Here's the logic. It exploits the funding rate difference between the spot and futures markets. So the system usually on the same asset opens a two-sided position. One side is a spot position, the other a futures position. The goal is not to predict price movements but to earn funding payments in the futures market. Trying to generate income. For example, if long positions pay funding to short positions, the strategy takes positions accordingly and collects that funding income on your behalf. But here's the key point to keep in mind. Smart arbitrage is never risk-free, because factors like the futures market, funding rate fluctuations, fees, and volatility all come into play. In short, this isn't the product where you just deposit and wait. It isn't a simple earn product. Smart arbitrage is designed for users familiar with spot and futures markets, and who use this knowledge. It suits those who understand how funding rates work. If you're a beginner, don't invest in this product based solely on the APR displayed here. Let me be very clear about that. Binance Smart Arbitrage is an arbitrage tool between perpetual futures and spot markets. It aims to collect funding fees and is defined as also a vehicle subject to the product's rules. Note that this product follows feature trading rules. When you open this page, you'll find the questions below. Reading the FAQ section will help you understand it better. Here you can see the USDT net APR. It will be credited in 52 minutes. This is the 30-day APR. The portfolio includes Bitcoin, Ethereum, and Doge token, among others. Let me show you how it works. First, it asks you to complete the quiz. You can pause and review the quiz answers like this. Once you finish, I'll show you here. When you go into this, you'll need to have USDC. It shows the minimum USDT needed and the equivalent in HDR Bitcoin. It also shows the maximum amount allowed. I'll enter my $200 here. It displays the estimated position size. So it says around $180. And shows the minimum holding period is 14 days. It displays the spot and futures fees specific to my region. And after confirming here, you move to the Smart Arbitrage section. So I'm effectively depositing my funds at the current APR I see on screen. In short, that's how this system works. Alright, let's move on to the next section. Our next section is on-chain yields. I'm now opening on-chain yields. On-chain yields is an advanced feature that lets you join DeFi protocols directly through Binance. Normally, to earn yield. In DeFi, you need to connect your wallet. Choose a network, access the protocol, and make transactions. With on-chain yields, Binance simplifies this whole process for you. For example, instead of staking your Bitcoin or dollars or USDT directly from your wallet into an on-chain protocol, it lets you join the product through Binance instead. Some products reward you with tokens, while others give points or use different reward systems. You should know this too. On-chain yields, Babylon Bitcoin staking. Sol Protocol Bitcoin, listed BNB. AB's platform USDT shows the APR in duration, meaning the funds are locked. Are currently active on-chain yields. But don't treat this like simple earn. I want to stress that. Because there's external protocol risk. A smart contract bug or protocol failure. Risks like market volatility or redemption delays. Binance clearly states these are high-risk products with no guaranteed returns. Simply put, on-chain yields is a way to earn certain DeFi opportunities from your Binance account. Are easier to access with it. But this convenience doesn't make it risk-free. If you're new, start with simple earn. So approach on-chain yields with more caution. For example, I click subscribe on the USDT section. I entered 200 USDT from my balance. Here I can see the APR for 15, 30, 60, and 90 days. Here's the end date when the first reward will be paid out. And here, you choose where it goes. Should it go to your spot wallet, simple earn, or flexible savings? By making your selections here, the system shows you exactly what you'll earn after 90 days. Here, there's a section for your personal quota. You can also see the maximum amount of USDT you can deposit. That's how this section works. Now that we've covered advanced earn, let's move on to the loan section. Yes, folks, Binance Loan is not an earnings product like Earn. This is the borrowing section. The concept is simple. If you have crypto like Bitcoin, Ethereum, or BNB, and use them as collateral, this lets you borrow USDC or another crypto in return. For example, you don't want to sell your Bitcoin, but you need cash. You can put up Bitcoin as collateral and borrow USDT instead. So without selling your Bitcoin, you get liquidity. Use the money you've put as collateral to meet your cash needs and keep your crypto. The key thing to understand here is LTV. LTV stands for the ratio of your loan to your collateral. So the system checks this. How much collateral did you put in? How much did you borrow against it? For example, I clicked on borrow now here. So, I can choose what I want to borrow here. USDT, Bitcoin, Ethereum, Solana. You can select any token you want. For instance, I want to borrow in USDT. Let's say I need $50 right then. I'm just giving you a hypothetical example. In return, it automatically locks $64 in my spot account, guys. And the current LTV is 78%, and the liquidation threshold is 91%, a high risk level, as you can see. If the ETH spread narrows to 0.85, here's what happens to the liquidation price. Just as an example, let's say this is Bitcoin instead of USDC. Say I want to borrow this amount in Bitcoin. In return, I get $98 in my wallet. Just an example. Right now, I have about $204,205 extra USDC in my wallet. I'm putting up $200 of this as collateral here. It shows the current LTV is 38.25 here. So that's a low ratio. Not super low, by the way, guys. Never try to max out your LTV and borrow at the limit. As you can see below, there's a liquidation price. So if I take this loan, my Bitcoin liquidation price is set at $182,000. And if I don't repay it in time, that my funds will also be liquidated. This shows here, guys. Once I read that and click I understand, then hit start. It automatically lends me the money. For $200, I'll get this amount of Bitcoin. If you have Bitcoin, select Bitcoin here. If you have Ethereum, select Ethereum. If you have Solana, select Solana, or whatever token you hold. Then choose the token you want in return. Do you want dollars or a different token? The key here is to keep your current LTV low. Pay attention to your liquidation price. After that, you can also take out your loan. So in short, Binance Loan lets you get liquidity without selling your crypto. Without selling your crypto. But I want to stress this again. If you don't fully understand LTV, interest rates, and liquidation levels, or if you're not familiar with this feature, I can't stress enough that you should not use it. Alright, everyone. To wrap up, I think I've covered everything. So, Binance Earn isn't a single product. Simple Earn is the easiest to understand for beginners. Flexible products give you more freedom. Locked products can offer higher APR, but come with a lockup period. Staking and Ethereum, Solana. Advanced Earn has more complex and riskier products. Loans is a borrowing system, not an earn product. So when using Binance Earn, don't just look at the APR. Check the product type, lock period, exit conditions, and your risk. Here's the best approach. First understand the system, then test with small amounts. And start using these products. If you found this video helpful, don't forget to like and subscribe. If you have any questions about Binance Earn or other Binance products, we are happy to help. If there are points you don't understand, guys, feel free to leave them in the comments below. For new users, the registration link is in the description below. See you in the next video. Take care.